Personal finance practice problem using OneNote. Accounting equation. Prepare to get financially fit by practicing personal finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side. We're in the Practice Problems tab down in the 2140 Accounting Equation tab. Also note, when using OneNote, take a look at the Immersive Reader tool. Our presentations also in the text area with the same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we got our information up top, calculations on down below, looking at practice problems related to the accounting equation, which can commonly be in two formats. It could be more like three formats generally if you use your algebra, but most commonly and most useful in two formats, the first of which is going to be the one preferred by accountants typically, that being assets equal liabilities plus net worth, which if it wasn't a personal, if it was a business, in other words, might be called equity, stockholders' equity, owner's equity, partnership equity, or net worth, as it might be called in like a not-for-profit, net assets. So all the same kind of concept. And the reason accountants like this format is because the assets represent, they're two sides of the same coin, you could think of it. Assets are what we're talking about. We're talking about the financial assets in total, which have claims to them either by a third party, someone other than us as the individual in this case, or if not by a third party, by us. So these two over here represent someone's claim, either a third party or us, claim to the assets that are represented on the left-hand side. And that works quite well with our double entry accounting system when we enter transactions and whatnot. But when we're analyzing the financial statements from a financial perspective, oftentimes it makes sense to think of it this way: assets minus liabilities, which is the same calculation if we just simply subtract the assets from both sides of the equation using our algebra. We get to assets minus liabilities equals the net worth, which makes the net worth kind of like the bottom line and puts the emphasis on the net worth, which makes sense because that's kind of what our major objective or thought process would be. How much stuff do we have in terms of value and how much stuff do we owe to other people, like the bank possibly? Then the net would be our net worth. Now, in an accounting equation format, if you're working book problems, then they'll often kind of give you this information in a mixed up format. You use your algebra to figure it out. Obviously, there's only three unknowns here to sort of figure it out. If you know two out of the three, it's a fairly simple algebraic equation. It is something that you want to work on multiple ways, because in practice there are times when you want to back into a certain number and you really want to understand this relationship quite well. It seems like it is a basic equation, but just you want to kind of intuitively understand what exactly you're talking about with the assets equal liabilities plus the net worth and working practice problems, just to understand that even if you're not working a book problem or working it for test questions can be useful. If you are working them for test questions, you can clearly expect these kind of calculations where they give you two out of the three on a multiple choice question, for example, and make you use your algebra to find the third item. Now, when you find the third item, so for example, if they give you assets, liabilities, but not the net worth, that's what the most common scenario would be in practice, right? When we've been looking up our data, we've been looking at the assets that we could find basically from the financial institutions, the liabilities we could find generally from the financial institutions, generally assets like the home, we couldn't find it, but in any case, and then we'd subtract them out to get to the bottom line number. Now, you could list this out in a vertical fashion, which when there's only three accounts, I kind of prefer doing. When I have an equation that's like less than 5 numbers in it, and it's a common type of equation, then oftentimes, especially 3 numbers, I might just list it out in the common way that I would format it, which would be assets minus liabilities, would be the net worth. Because sometimes I feel like this vertical fashion is just easier for me to line up the numbers and write it down. So if you're in a test situation, I think it's actually a little bit easier to write it down this way than to write it out your algebraic way and then solve for the unknown. And if the unknown is not the bottom line number, you could still back into it seeing the algebra fairly clearly, since there's only basically 3 numbers. So if we pull out the trusty calculator, we could see here we got the 48,000 plus the 19,300, or minus the liabilities, let's say minus the 19,300, would give us the 28,700. You might do that in an accounting equation format, which I have assets in green equal liabilities in orange and plus the net worth equity. So that would give us then, if we're solving for the net worth, we're solving for this bottom line or end number, it would be the 48,000 equals the liabilities plus the net worth. This would be X in that equation. And then if that was X, you'd have to solve for X, subtracting the liabilities from both sides, which once again would result in 48,000 minus the 19.3. If you wrote the accounting equation this way, but horizontally, you would have assets minus liabilities. I put them in it as a negative number here, but equals the 28.7. So don't let this throw you off. Minus liabilities, don't let it look like it's a minus a negative number. It means minus the 19.3 here would give you the 28.7. And the thing we don't know is the net worth. So this would be another format, which it would be nice and easy. Just take the 48,000 minus the 19.3 if you're used to or like to write it down that way. Now, the next one's a little bit more complicated if you're used to seeing the equation as assets minus liabilities equals net worth, because then I would still line it up this way. And just if I was doing a test question, I think this might be the easiest or fastest way to do it, to line it up vertically. You know, that's how I would, and then just say, okay, well, if the 98,000 minus the 27,000 or minus something equals 27,000, then I should be able to take the 98,000 minus the 27,000 to back into the liabilities, which should be then the 71. And then I would double check it by saying, does that work? If I take the 98,000 minus the 71,000, I should get the 27,000. And you could see that same kind of calculation if you write it out this way: assets equal liabilities plus net worth. This time the unknown would be here, the liabilities. So you'd have the 98,000 equals, this one would be X, plus the 27,000. And if you wanted to solve for this number and it was X, you'd subtract 27 from both sides, which would result once again in 98,000 minus the 27,000. Or if you write it down this way, you'd have the assets minus the liabilities equals the net worth. What we don't know are the liabilities. So if this was X, then you'd have the 98,000 minus X would be the 27,000, and you take the 27,000 minus the 98,000, which would give you a negative number, and then you'd have to multiply each side by -1 because you have a -1 on each side. You get the subtraction problem, getting you to once again the same result of the 71,000. Okay, so let's try this one. This one's the same kind of easy one if you see it in this format: assets minus liabilities equals net worth. Then we could just line it up. So that's 38,400 minus 14,300 would give us the 27.1. We'll put it in the trusty calculator just so the calculator's like, hey, you didn't calculate it using, so we'll plug it there. Okay, the 24.1, you can plug it in this way: assets equal liabilities plus the net worth. And this way, obviously, here, the unknown is the net worth. So this would be X over here. So we'd have the 38,000 equals the 14.3 plus X. And to solve for X, we would have to take that 14.3 and subtract it from each side, which would result in, once again, the 38.4 minus the 14.3, which would give us that 24.1. If we saw the accounting equation this way, assets minus liabilities equals net worth, the unknown being the net worth, that's a straightforward calculation again. We just take, the X would be over here. So we'd have the 38,000 minus the 14.3 would be X, which we could just simply solve for. This one, lastly, we got the assets is the unknown. They gave us the liabilities and the net worth. If we line it up vertically, I'd say, okay, this number, whatever it is, minus 41,000 has to equal the 63,000. So you would think I'd have to take the 41,000 then plus the 63,000 to back into this top number, which must be 104,000, which I'll double check now by taking that 104,000 minus the 41,000, and that gives us the 63,000. If I saw it this way up top, assets equal liabilities plus equity, that then would be an easy equation, easy way to write it, because this would be X, the 104 would be X equals the 41,000 plus the 63,000, and all we'd have to do is add up these two to get the 104,000. If you wrote it this way, assets minus liabilities equals net worth, if that's the way you see it, then we're going to say this would be X, the 104, minus the 41,000 would equal the 63,000, we'd have to then take this negative 41 would have to be added to the 63,000, which would once again give you that 104,000 for X.